Hello, friends. Welcome to this live trading session. I'm so excited to share something special with you today. In this session, I'll show you how to trade effectively, even with a small amount of capital. The best part? I'll demonstrate a simple and practical strategy using just two powerful indicators, and I'll aim to double my capital right in front of you. This is going to be an easy-to-follow step-by-step session, so whether you're just starting out or looking for a new approach, you'll find this super helpful. Let's dive in and let's make this an exciting and educational session. Right now, I'm trading in the BTC USD pair. If you look at the top bar on my screen, you'll notice my current account balance is $1,000. I know that many traders start with smaller amounts, like $500, so I thought, why not take this on as a challenge? I want to show you that even with a small capital, it's possible to grow your account effectively. For this live trade, I've set myself the goal of doubling my balance, and I'll take you through every step of the process. To make it simple and easy to follow, I'm using just two powerful and widely trusted indicators, Bollinger Bands and Stochastic RSI. These indicators are fantastic for identifying trends and spotting great entry and exit points, and I'll show you exactly how I use them together in real time. Whether you're trading for the first time or looking to refine your skills, this session is all about making trading approachable, practical, and fun. Let's get started and see how this challenge unfolds. Stay tuned and let's make this an exciting session. By the way, I'm sticking to the default settings for both the Bollinger Bands and the Stochastic RSI in this trade. No tweaks or customizations. Now you might wonder, why am I choosing to rely on just these two indicators? Well, let me break it down for you. The Bollinger Bands are an incredibly versatile tool that gives me a clear view of the market's volatility. They consist of three lines, a moving average in the center and two outer bands that expand and contract based on market volatility. When the bands widen, it signals higher volatility, and when they narrow, it shows a quieter market. What makes Bollinger Bands particularly powerful is their ability to highlight potential breakout opportunities. For example, if the price moves near the upper band, it may indicate an overbought condition or a strong bullish momentum, while movement near the lower band might suggest an oversold market or bearish momentum. This makes the Bollinger Bands a fantastic tool for identifying high-probability trade setups. On the other hand, the Stochastic RSI is all about understanding the market's momentum. Unlike the standard RSI, which measures relative strength, the Stochastic RSI refines this by applying a stochastic calculation to the RSI values. This gives me a more detailed view of overbought and oversold conditions. When the Stochastic RSI approaches the top of its range, it suggests the market might be overbought, indicating a possible reversal or a slowdown in bullish momentum. Conversely, when it's near the bottom, it hints that the market might be oversold, signaling a potential bounce or a slowdown in bearish pressure. These signals are vital for pinpointing ideal entry and exit points in a trade. So, combining these two indicators gives me a dynamic duo, one that tracks volatility and breakout opportunities, and another that fine-tunes my timing with precise overbought or oversold signals. This allows me to confidently navigate the trade and aim for the best possible results. Trading doesn't have to be overly complicated if you have the right tools and a solid understanding of how to use them. Let's see how these indicators play out in this live trade. Let's take a step back and analyze the market thoroughly before deciding whether to take a long or short trade. Remember, proper analysis is the foundation of any successful trade. If we take a close look at the market's recent movement, we can see a clear downward trend. The price has been consistently moving lower, indicating bearish momentum in the market. However, one important thing about trends is that they don't last forever. Eventually, the market tends to reach a point where the selling pressure eases, and the buyers start stepping in to take control. This point is what we call a potential reversal zone. Right now, the chart is giving subtle hints that the market could be nearing such a reversal. For example, if you observe the price action closely, you might notice that the candles are starting to lose steam on the downside. This could be an early sign that the sellers are running out of momentum. In addition, if we look at the Bollinger Bands, the price could be nearing the lower band, which often acts as a dynamic support level. Pair that with a reading from the Stochastic RSI, and we might spot an oversold condition, further confirming the possibility of an upside reversal. Based on these observations, my plan here is simple. I'm going to anticipate and capture that upcoming reversal movement to the upside. Reversal trades can be incredibly rewarding because they allow us to enter at a turning point where the risk is usually lower and the potential for profit is higher. Of course, I'll be waiting for a clear confirmation before entering the trade because we don't want to jump in prematurely. All right, I've decided to enter a long trade here, and my decision is based on the clear signals from the Stochastic RSI. Take a look at the Stochastic RSI. Notice how it confirms the reversal we were anticipating. The indicator has moved out of the oversold zone, showing a strong upward cross. This is a classic signal that the bearish momentum is fading and the bulls are stepping in to take control. It's exactly the kind of confirmation we were waiting for to initiate a long position. Now, let's pair that analysis with what's happening on the Bollinger Bands. If you observe closely, the bands are beginning to contract. This contraction typically occurs when the market is transitioning from a high volatility phase to a more stable or directional move. When the bands tighten, it's often a precursor to a strong price movement. In this case, the upward confirmation from the Stochastic RSI, combined with the Bollinger Bands contracting, strongly suggests that the market is gearing up for bullish momentum. Now, take a good look at the market. It's currently moving down. This is a situation that often tests the patience and emotional control of traders. At this point, some traders start to panic, fearing further losses, and they decide to exit their trades prematurely. They book losses out of fear, thinking that the downtrend will continue indefinitely. But this is exactly where the concept of market manipulation comes into play. This downward movement can often be a trap designed to shake out inexperienced traders or those who lack confidence in their analysis. This phenomenon occurs because big players or institutions in the market can manipulate price movements to create false signals, making it appear as though the trend will continue downward. This panic selling creates liquidity for them to take positions at better prices, and then the market reverses in the opposite direction, leaving those who exited their trades regretting their decisions. It's a classic trap designed to exploit fear and emotion. Now, let's refocus on what's actually happening and why this moment should not cause panic. Always remember that Bollinger Bands are not just a tool to measure volatility. They also act as dynamic support and resistance levels. When the price moves closer to the lower band, as it is doing now, it often signals that the market is approaching an area of strong support. At the same time, notice how the Bollinger Bands are starting to tighten. This tightening indicates a reduction in market volatility, which is often a precursor to a significant breakout. When the price begins to move away from the lower band during this tightening phase, it's like the market is gearing up for a squeeze. The squeeze is a setup where the market builds pressure, preparing for a directional breakout. In this case, with the price rejecting the lower band and the tightening bands signaling an impending move, the breakout direction is likely to be upward. This is why moments like these are not times to panic, but rather times to stay focused and disciplined. In fact, this is one of the best entry points to consider taking a long trade. Why? Because you are entering near the lower band, which acts as a strong support level, and you are positioning yourself early for the bullish breakout that the Bollinger Bands are signaling. This strategic entry allows you to minimize your risk while maximizing your potential reward, as you're getting in at a point where the price is likely to move upward from here. Now the price has moved near the upper band of the Bollinger Bands, which is a key area to pay attention to. When the price approaches the upper band, it often indicates that the market is either in an overbought condition or experiencing strong bullish momentum. This is a critical signal because while the market is still moving up, it's also nearing a potential turning point. Simultaneously, let's take a closer look at the Stochastic RSI. The indicator has climbed to the top of its range, which is another sign that the market might be overbought. This suggests that the bullish momentum could be losing steam, and there's a possibility of a reversal or at least a slowdown in the upward movement. When both the Bollinger Bands and the Stochastic RSI align like this, It's a strong indication that we're nearing the end of this bullish phase. This is exactly the time when we need to think about locking in our profits. It's always better to walk away with a win than to stay in the trade and risk losing everything to a market reversal. With that in mind, I'm making the decision to exit the trade here and book my profits. By doing so, I'm locking in a solid profit of $600, which is a significant gain considering the starting capital. This is a perfect example of why having a strategy and sticking to it is so important. The indicators gave clear signals to enter the trade, and now they're signaling that it's time to exit. By following these signals, we've successfully navigated the trade from start to finish, turning a good setup into real profits. Now we can clearly see that the market has started to slow down. The bullish momentum is fading, and based on the current price action, it's evident that a reversal is just around the corner. This slowdown is a strong signal that the market is losing steam and is preparing for a shift in direction. To capitalize on this movement, I'm going to enter a short trade here. By doing so, I can capture the downside movement that is likely to follow this reversal. My plan for this trade is straightforward. I will hold my position and wait until the market reaches the lower Bollinger Band, which acts as a dynamic support level. Let's check the Stochastic RSI. Look closely. It has now reached the oversold zone. This is a critical signal because the Stochastic RSI is indicating that the bearish momentum is likely nearing its end. This is my cue to exit the trade and secure my profits. All right, I'm exiting the trade here and locking in a profit of $405. With this second trade, my total profit for the session now exceeds $1,000. My initial capital has officially doubled, and I'm feeling confident as I look for my next opportunity. Right now, I'm preparing to enter a quick trade because the market is showing a promising setup. If you look closely at the Bollinger Bands, you'll notice that both the upper and lower bands are expanding outward. This expansion signals increased market volatility, which often points to a high probability of a price breakout. I'm going to enter a long trade here. The expanding bands suggest that the market has room to push higher, and I want to position myself to take advantage of this upward momentum. As always, I'm keeping an eye on my indicators to guide me on when to exit. For this trade, my plan is simple. I'll stay in the trade and ride the bullish momentum until the Stochastic RSI reaches and crosses into the overbought zone. This is a reliable signal that the bullish run may be nearing its end, and it's the perfect point to exit and secure profits. All right, now the Stochastic RSI has reached the overbought zone, and as it starts to cross, it's a clear signal that the market is losing some of its bullish momentum. This is the ideal time to close the trade and lock in my gains before any potential reversal erases my profit. I'm closing the trade now and have successfully booked a profit of $511. That's it for this session, guys. I truly hope you found this video both insightful and educational. Throughout this session, I've shown you step by step how to take a small trading capital and double it with the help of proper analysis and a disciplined approach. Every trade I took was backed by a clear strategy, using reliable tools like the Bollinger Bands and Stochastic RSI to guide my decisions. This is proof that with the right knowledge and tools, anyone can achieve consistent profits in trading, even starting with a modest account balance. The goal of this session wasn't just to show my results, but to demonstrate that success in trading comes down to preparation, strategy, and execution. By learning to read the market, identifying high probability setups, and staying disciplined in your trades, you can set yourself up for consistent growth. Trading doesn't have to be complicated if you understand the basics and apply them with precision. If you enjoyed this video and feel like you've gained something valuable, don't forget to hit the like button and share it with others who might benefit from this knowledge. And if you're serious about learning more, be sure to subscribe to the channel for more live trading sessions, strategies, and tips to take your trading journey to the next level. Thank you so much for watching, and I look forward to seeing you in the next video. Until then, stay focused, stay disciplined, and happy trading.